We are back again to simply explain to you something that is extremely important. If you're a forex trader out there, if you're a commodity trader, if you're a crypto trader, this information is for you. Mostly if you don't trade blindly. What do I mean trading blindly? Without looking at bank statements, central bank statements, without looking at news events like CPI. Today is a special day. Today is 14th July. We have what we call CPI on the dollar. Now, different countries have their CPI, but the one for a dollar affects almost the entire world. Why? Because a dollar is the strongest currency. Yeah, actually, it's the most dominant currency in the world. But what is CPI? I know there is a new person here who knows nothing about fundamentals, and they're asking themselves, what is CPI? CPI is consumer price index, the prices of commodities. Let me give you an example. If last month bread was at, I'm going to speak in dollars, bread was on $2, this family bread $2, then this month bread is on $3. It means the CPI on bread, it has increased. Why? Because the price of bread has increased this month compared to previous month. Meaning people will spend more money on things like bread. Now, why am I using an example of bread? In a country like the US with 320 million people, bread may look like something very simple, but it is something that is consumed by almost 100% of the population. So the change in the price of bread can affect the entire population. That's how powerful these things are. So whenever we are looking at CPI, we are not looking at CPI of the month we are in. We're in July. When the CPI information comes out, it is not for this month. It's for previous month, meaning last month. So today at 3:30 Ugandan time, if you're in Southern Africa, that is 4:30. If you're in West Africa, add some hours, you get the numbers. Or you get the time right. Today at 3:30, we have CPI for month, which is M stock M. What does it mean? We are looking at CPI for the previous month, which is June. In June, the CPI was on 0.2%. That is previous. Forecast. What is forecast? Analysts, central bank analysts, journalists that are dealing in that analyze economics. These guys sit down and they do their research and give their forecast, what they expect. In this case, they expect it to be maintained at 0.2%. Actual, this is what we are waiting for to come out at 3:30. If the number comes out higher than the forecast, what the entire nation expected, it means the CPI has increased. It means the prices of goods and commodities, essential goods and commodities, has increased. Do you get my point? When we talk of essential commodities, we are talking about fuel, groceries, gas, water, all these things that affect almost the entire country. Price of things like eggs, these things that we use in our homes. It means generally the price of goods and services has increased in the United States. What does it indicate? What does it mean? It means within the US, people are spending more money on goods and services. When people are spending more money on goods and services, what does it mean? It is inflation. Inflation is whereby people spend more money on goods and services. Now, what happens to someone who has a job out there? Someone who has a job out there, they are going to spend more money on these things. They are going to be overstretched. So the central bank normally uses this information to make decisions. Either to increase interest rates or to lower interest rates. The interest rates I'm talking about is to control the inflation. If the number comes out higher, it will send a signal to the central bank, to Kevin Wash, who is the Fed chair. It will send a signal to that guy that there is a lot of inflation in the country. Even if, because we are looking at what he will think, what is it sending to investors? The signal it is sending to investors. What is it sending to financial traders and all this? It sends a signal that the central bank looks at increasing interest rates, or if they are high, keeping them high. Why? Because that's how it always wants to deal with inflation. Scenario 2. If the actual number comes out lower, we're talking about coming out one negative, or even if it is 0.1, 0.05, negative, or anything, it means actually the prices of goods and services are lower this month. The previous month compared to the other month of May. So it means that now the central bank can look at lowering the interest rates. Do you get my point? So this information is used in that scenario, in that one. So the CPI for is the one that causes that quick volatility at 3:30. Market moves. But after that noise happens, that's where smart traders come into the market. Actually, big traders that make big money, they don't look at CPI for they look at it, but they don't focus on CPI for M stock M. They focus on CPI for Y stock Y, which is here. Why? Let me explain. CPI Y stock Y. Now it is comparing years. Last month of June, data comes out. They compare it with the 2025 same month. The 2025 same month, CPI came out at 2.9%. They're expecting it to be 2.8%, whatever. If the number comes out lower than the forecast, meaning the CPI for June, it was lower than the CPI for June 2025. What does it mean? It means this is the data that gives the market the direction. Get this clearly. I know this is a very technical video. This is a technical screen recording. So I don't expect someone to listen to it for once. You can listen it 2 times, 3 times, because there is no way I can make these things easier in explaining. So the CPI for a Y stock Y is the one that sets the direction of the market. If the number comes out higher than the forecast, inflation coming out as 3, 3.1, 3.4, 3.5, anything higher than 2.8, it means the prices of goods and services this year are higher than the previous. This year, June are higher than the previous year. Meaning the cost of living last year was cheaper than the cost of living this year, the same month. This is basically what it means. What will it indicate? If the number comes out lower than the forecast, it will indicate that there is less inflation. People are spending less money on goods and services. What will it mean? It will send to the central bank a signal that, okay, you can do this, you can do this, you can do this. Concerning to what I explained on M stock M. So use this information to trade. You can listen to this video recording 2 times, 3 times, 4 times. But if it still confuses you, you can reach out and ask me, then I will guide you accordingly. And if you want to learn how I analyze these things, let me show you something very interesting as I'm ending. Last night, I took a trade simply by basing on technicals, purely technical, fundamentals. No technical at all, no charting at all, zero. I took that trade basing on a tweet from Trump. Let me show you. No jokes. I've already done even break even. I took a trade on oil. It is running in $215 profit. So we know what we are doing. And I'm targeting over 600 plus. Why? Because look at it. This is where I'm targeting. In real time. I've already locked in $33 actually. If you look, break even is already about $33. I'm targeting $610. I'm extremely confident. I'll keep moving my SL, like trading, but this is a very good trade. Become a fundamental trader. You will enjoy trading. I can assure you that. So if you want to learn these things, in my bio there is my number, WhatsApp number. You can reach out to me and you take on the classes. Thank you.